focus on the next company which is on our radar this morning, and this is MCX. Now, the company has revised transaction fees for futures and options contracts after a directive coming through from market regulator SEBI. Morgan Stanley has issued an underperformed rating on the stock. Do note that the stock has, of course, surged more than 84% just this calendar year itself. To talk about the business prospects, we have Rishi Nathany, Chief Business Officer at MCX, joining in. Rishi, good morning. Thanks so much for being with us. So let's start with this news on the transaction charges. Now, I know that this flows from a wider regulatory move that SEBI made, not just for commodity exchanges, but even stock exchanges, saying that, how much you charge should not be based on the volume of trading. There should be a flat structure. So what does this actually mean for your profitability, your revenue? Will there be a hit? Because now you can't go up to the top of the band. Earlier, the top side of the band was more than the flat number, the flat fee that you have now.
So, good morning. Thanks for having me here. So just let me explain that earlier, all exchanges were charging transaction fees based on certain slabs. And SEBI said that it needs to be uniform and true to label, which means that the end client should pay what the exchange is charging the broker. So first of all, it brings a lot of transparency into the system. Secondly, it reduces the transaction costs of the end client. So in that sense, it's a very good move. Now, in terms of you're saying that we cannot charge the highest slab, but at the same time, we cannot even charge the lowest slab. So we have made the charges in such a way that it is around our average realization. So I do not see any major impact of these transaction charges on our trading volumes or our revenues.
Hi, Rishi. Good morning and good to see you. And I'm looking at a note from Morgan Stanley this morning, and they believe that give and take everything. If everything is constant, they believe that your EPS estimates could move up by around 5% in FY26 based on these changes. Do you concur? Low single-digit increase is possible?
I'm not an analyst. I can just drive business, and that's what I'm here for. And we'll focus on doing that, and we'll leave the predictions to the analysts.
Right. Rishi, hi, good morning. Prashant here, and good to see you. It's been a while. Could you, again, not asking you to don the analyst hat, but incrementally, does this help or hurt in terms of incremental earnings? No numbers, nothing. Or you think it'll be neutral for you? You'll be able to manage this?
Thanks, Prashant, and good to see you again after quite a long time. So, first of all, please understand that this helps the market participants in the sense it helps the end clients. And wherever end clients are helped and more transparency is brought into the system, it is always better for the entire system, number one. Number two, in terms of our revenues or the impact, all I can say is that we have made the transaction charges around our average realization. So I do not see how it would impact us either ways.
The other one was, the rule requiring you, if clearing interest on clearing funds has to be returned, right? That was the other bit. Could you talk to us about that? Could you quantify some sort of an impact? What do you see?
So that's a clearing corporation issue, and you'll have to speak to the clearing corporations regarding that. I will not be able to comment from the exchange perspective.
No, but
at the exchange level, will this move earnings in any which way incrementally at the margin?
So, as I said, exchanges don't handle the funds. That is a clearing corporation activity.
No, but Rishi, I think what our understanding is, and correct us if we're wrong, because this was sort of the interpretation floating around in the market, and this is still a consultation paper. I don't think we have the final rules in this just yet, that the income that the clearing corporations were earning, that needs to be given back to clearing members as well. I mean, in some proportion, there's a change happening over there. What is your understanding of the issue? Where does it stand right now? And at MCX, is there any revenue you're earning because of these returns being made to clearing members?
No, so at MCX, we do not. As I said, this is a clearing corporation issue. The clearing corporations handle the funds, and that is where the money lies. So, as I said, I would not be able to comment on that. You'll have to speak to clearing corporations on that.
Interest income that MCX is earning at all in any format because of these funds lying in the clearing corporation, right? So there's no impact.
No, so MCX doesn't earn. It's the clearing corporation which handles and gets the revenues from that.
Okay, all right. Rishi, as you clarified at the start of this interview that you drive business. So, there could be a couple of changes. There's a discussion that increase in the lot size. How do you think this impacts, business, volumes, revenues?
So as I understand, this is not applicable for commodity segment as of now. It is only for the equity index segment. And going forward, if it is applicable to the commodity segment, we will cross that bridge when we get to it.
Okay. Do you expect it to? Are there any discussions underway for commodities as well? Or
I can't comment on it.
Oh, okay. So that's a yes? Okay. Is something, I mean, is there a conversation happening? We don't know if it will result to something or not, but can you tell us that much?
So as I said, there is nothing about the commodities at present, and as and when it comes, we'll cross that bridge.
Okay. Now, over the last 2 years or so, and we've discussed this in the past, the big excitement and I think what has excited investors in the stock has been the huge jump in options volumes, right? And I think we spoke when total options volumes notional were not even, I think we were at about 60-70,000 crores. And we were asking you, when will you hit 1 lakh crores? Can you give us the trajectory there, Rishi? What do you expect FY25 to end with? What kind of growth can we expect there?
See, I can only tell you what we've done. What will happen is up to the market. As you know, we are a trading platform. And while we try to, focus on our business, end of the day, it's about the participants who decide how much they trade on the exchange. Having said that, all I can tell you is that in FY24-25, till date, our overall turnover is 1.95 lakh crores versus 1.09 lakh crores last year, out of which options is 1.69 lakh crores compared to 89,000 crores last year. And futures also has seen a tremendous growth at around 26,000 crores versus 19,500 crores. So the growth has been across futures and options and again across segments. And on 14th September this year, we hit a record high of 4.72 lakh crores with many commodities also hitting new highs in terms of turnover. So it's been broad-based growth, it's been all-round growth, and we hope that the market continues to support us, the market participants continue to support us in this way.
So, Rishi, while of course those turnover figures are looking fabulous, the market also wants to know what this increased trading volume is going to mean in terms of revenue and profitability, right? And while MCX has been doing well with the way the stock is surging, I think the market wants more. I think first quarter, some of the estimates were on a margin of 60% plus. You were just, you were below that mark. So let's talk about, revenue projections, given that you're looking at more product launches as well. So revenue FY25 and the steady state sustainable margin profile that you will target over this year.
So both in terms of revenues and margins, I will not be able to comment. What I can say is that we hope to continue the growth we have been doing and maybe even, try and grow on that as well. So that is what I can say. We continue to focus on all our contracts, whether the existing ones, new ones, all our product segments. And with this clarity of uniform transaction charges also, we hope that the end customers will benefit and overall the participation on exchange should increase. Because, last year also we have seen a very healthy growth in our overall traded clients, and we hope to see that grow. We have seen more FPIs participating on the exchange, and that also is growing in a very healthy manner.
We have lots more questions, Rishi, and you'll have to come back again. But I just want to end with this. You said as of date, YTD option volumes are 1.7 lakh crores, right? That's what you said?
Yeah, option volumes are 1.7 lakh crores.
So another 6 months to wrap up the year, you'll be at 2.5 this year?
I don't know. You extrapolate it.
Because, if you look at estimates, it was 1.7 for the full year, FY25. You're already at 1.7 now.
Yeah, but this is average daily turnover. So, so hopefully we should continue the growth rate. So that is what I'm trying to say, that end of the day, we do not decide what that participation is, the market decides that.
All right, Rishi, we'll leave it there. Thank you very much for your time. Appreciate it very much on CNBC TV 18. Well, we'll take a quick commercial break here. We're going to come back and look at the market. We've got one more company joining us on the other side, Kim's, the hospital company. Stay with us.